All right, fixed rates have been all over the place lately, but if you zoom out, you can see that they've actually been pretty steady since January. But why does this all matter? Well, for one, the current fixed rates can directly impact how much of a mortgage you can borrow and how you can handle your monthly cash flow. And for two, most buyers are leaning towards fixed rates these days. So knowing where they stand can give you a good indication of where Toronto real estate prices might be headed. And understanding both of these trends can be a game changer when you dive into real estate investing in Toronto and can seriously affect your long-term investment potential. So let's dive into all of this. But before I do that, please hit that like button and subscribe. Now let's talk about the Bank of Canada's policy rates. They've been holding steady at 5% since last summer. And according to bank forecasts, we might see rates start to drop by mid-year and end off at around 4% by end of this year, 2024. But here's the thing, these bank predictions can easily change. Now check this out. Banks have been cutting back how much and how soon their rate drops will happen. And that's because the market is still confused and getting mixed signals from the latest economic data. Now this is pretty much why fixed rates have been fluctuating and really staying put. Now let's look at the trends a little bit more. And as you can see, fixed rates actually dropped sharply at the end of last year. And with that, it was a clear sign that Toronto real estate prices were going to climb because this improved affordability. Now, fixed rates are stabilizing, and so Toronto real estate prices are probably going to level off. And historically, rents tend to follow the same trends as fixed interest rates, so we're also expecting rents to start to stabilize after they came down close to the end of last year too. So to sum it all up, Toronto housing is getting more stable, which is actually better for everyone. More predictability means that you won't get rich quick with real estate, but it should never be that way to begin with because it's just not sustainable. What goes up must come down, as we've witnessed. But now we also cut down on the downside price risk, the FOMO, and the stress that comes with the big price fluctuations. And we think that this is actually a better recipe for stable returns and long-term success. Now let's crunch some numbers. We've been eyeing this Toronto real estate investment property this week, and at a price of $950,000 in bigger renovations, you could generate some massive cash flow with 3 units. Plus, each mortgage payment builds equity, and there is a good chance of sustainable appreciation over time, which will lead you to stable long-term returns with real estate investing in Toronto. So if you do want to dive into a deal like this, just reach out to our team. We specialize in helping investors buy Toronto real estate, just like this example here, and we can help you craft a solid plan for long-term success. Just head over to this link here to schedule a time to chat. Thanks so much for tuning in, and I'll catch you in the next video. Bye.